Hey, welcome to the morning brief. Today's Wednesday, January 31st, so last day of January. So it's super important to look at the January effect, whether the market is up during January or down during January, decides whether, or at least projects whether the entire year is an up year or a down year. But also remember that this is an election year as well. So lots of different things going into what could happen this year. That being said, today we have a bunch of good stuff on the docket. ADP non-farm employment change came out at 8:15 and it was ugly. Only 107,000 jobs added. Employment cost index was down a little bit. 9:45 we have Chicago PMI. Crude oil inventories at 10:30, and at 2 o'clock, the giant grouping of red items: Fed funds rate, FOMC statement, and FOMC press conference. So Papa Powell is going to be speaking today, letting us know what the Federal Reserve is going to do with interest rates, whether they'll hold, increase, or decrease. This has a major effect on the economy going forward. If they raise rates, it means companies must pay more in interest to get funded to fund ongoing operations. So it has a direct impact on particularly technology companies, but all companies, on what it costs to do business. The cost of business will go up if the Federal Reserve raises rates. If they lower rates, the cost obviously goes down, and the lower the interest rate is, the easier it is to get funding for a company that may not be a tier one company. They'll pay less. So it's a big deal whether or not the Fed raises or lowers interest rates or does nothing. Monetary policy is also very important, and interest rates is part of that. However, the Fed could say, hey, we're not going to do anything, but we're going to increase the money supply or decrease the money supply. So what exactly does that mean? It means that they have bonds outstanding, they'll buy them back. When they buy them back, they're pushing cash out because they're buying their bonds back. So they push cash out, so then cash gets put into the system. Well, what happens when cash is in the system, especially if it's cheap cash? You have to do something with it. So whoever owned the bond now doesn't own the bond. He has cash instead. He's going to go out and have to put that money to work. And if interest rates are going down, that means he has to look for something other than bonds to put that money into. He may look into investing into the local franchise or some sort of local business. He may decide that he wants to buy IBM or Google. And that creates all that easy money, creates demand for a higher return because you can't get a good return on bonds because they keep lowering rates. Okay, see how this works? And so it's very important to see what the Fed is going to do, and why the market will go nuts at 2 o'clock. And I highly recommend staying on the sidelines until the market kind of decides which direction it's going to go after the federal funds rate has been announced at 2 o'clock and after the press conference has started as well, because you never know what Papa Powell is going to say. Okay, that's it for today. So big day today news-wise. Looking at the daily chart here, we are gapping down. Earnings were not good overnight, or worse than expected. So even though some of the big names made their numbers, Wall Street wasn't very happy, and so we are gapping down. Where can we go? I think we could easily come back down here to 48.90 area, maybe with some extreme action, 48.73. If for whatever reason they decide, hey, it's time to go up again, then you've got this low volume node right here at 49.59, and easily maybe even 49.76. 5,000 is on the radar. Everybody's talking about it. Everybody wants to go there. Yeah, whatever. Anyway, 5,000 is certainly within reach. Going on, inventory yesterday. So we had some pretty wild price action, down price action, down inventory. But you see this big bar. This is after the close. And that's where the earnings were not happy. We're not happy about earnings. So that was all after the close. Now we are gapping down. Correlated, so nothing to worry about there. What else we got on the intraday? Here's the ADP number going ugly looking. They went up and then down and then all over the place. Yep, it is what it is. Wait till it shakes out and see where we're going. It's probably going to be a lot of sideways action leading up to the FOMC at 2 o'clock. However, it could be very, very volatile within that sideways action. Let's see, support and resistance. Definitely some resistance at 49.50, 49.57. Really not much above that. On the downside support, we've got 49.10, 48.87, and 48.71. Stock Traders Almanac for today is 47.6, 47.6, so a negative expectancy for the last day of January. Hope you have a great day. Remember to comment, subscribe, and like. See you guys tomorrow. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com. Thanks.